Hello and welcome. You're with us here on Business Today. I'm Abha Bakaya. Here are the day's top stories. Sensex and Nifty close at 6-month highs, a day ahead of the RBI's interest rate review meeting tomorrow. Investors richer by 2 lakh crore rupees today. RBI may continue to stand still on interest rates. Repo rate may remain unchanged at 6.5%. All eyes on whether the RBI could further revise GDP forecast upwards tomorrow. Union Cabinet approves remaining third revival package for Bharat Sanchar Nigam with an outlay of 89,000 crore rupee. Telecom company share prices rise as a result. Elon Musk's Tesla agrees to the Indian government's stance, will set up a vendor base in the country, drops demand for lower import duties. Maruti Suzuki rolls out its much-awaited 5-door SUV. The Jimny starts at a price of 12.74 lakh rupees and will compete with the Mahindra Thar and Force Motors Gurkha. The Reserve Bank of India will likely maintain status quo on the policy repo rate at the end of the Monetary Policy Committee meeting that concludes tomorrow. It's much awaited. Most economists expect the MPC to keep policy repo rate unchanged at 6.5%, drawing comfort from the gradual easing of inflation. Joining us to discuss the possible outcomes, I have with me Sakshi Gupta, Principal Economist at HDFC Bank. Sakshi, great to have you with us. Let's get a sense from you first on what the RBI is likely to do. Do you also feel that a status quo is inevitable?
Yeah, good evening, Abha. Thanks for having me on the show. Yes, absolutely right. I think tomorrow's policy, we are going to see the RBI keep the repo rate on hold at 6.5%. Clearly, from the last policy, both inflation and growth seem to be moving in a favorable direction. We have seen inflation prints coming in below 5%, and they are likely to be, below 5% even for the last month. On growth, we saw an upside surprise for the FY23 numbers, and the momentum continues to hold on, given the high frequency data for the month of April and May that are coming out. So I think in this policy, the RBI will just wait and watch and look for greater signs of this downward momentum in inflation that we are seeing currently, and whether that's sustaining, and just remain on hold.
Okay, what does this mean for the economy though, Sakshi, given that, we are seeing real GDP stronger, consumption however is lagging, it's a better trade scenario and the services sector that's really uplifting growth. Do you feel that there could be any potential lags or any kind of impact of the earlier tightening that the RBI has already done that could still play out over the next few months?
You're absolutely right. I think that the transmission and impact of past rate hikes is going to play out over the coming quarters. I think we already are seeing some impact seep through in terms of consumer demand that seems to be moderating. And I think that given the global scenario and the headwinds in terms of at least goods export, we are going to see growth gradually moderating through the year. However, we continue to perform better, I think, compared to our peers, a lot of the Western economies. So no more rate hikes, and is broadly growth supportive. Although that being said, I think the transmission process will continue to weigh on consumption going forward.
Interesting, and I also noticed how you mentioned tapering growth, because that's something that everyone's got their eyes on. How worried are you about the global scenario, and where are we when we're talking about monetary policy in line with what we're seeing globally? What could we further anticipate, or what could be some of the pulls and pressures that the RBI has to keep into account?
Right. I think that given that, we are kind of looking at an impending, slowdown, recession in the US, Already in Eurozone, we are seeing Germany has already got into a technical recession. Now, these countries are a major trading partner for India, and therefore there are headwinds in terms of our export growth going forward. Moreover, I think if you just look at what the European Central Bank and the US Central Bank are doing, they haven't really ended their rate hiking cycle as of yet. And I think that, in an effort to broadly align ourselves with the global tightening, it is unlikely that the RBI will look at easing monetary policy in any way, this year. So we are basically going to remain on hold, at a pause, and any sort of pivot is unlikely unless and until the global monetary policy cycle starts turning. I think the financial risk, we saw an increase in the risk in the US with the regional banking crisis in the month of March. I don't think that that risk has completely gone away. There could be some, impending risks from that end, tighter credit, conditions. And we've, if you just look at even the forex market, the dollar index has been very, very firm, which has meant that, there is some pressure that is continuing on the rupee. So a number of risks on the global front. Of course, domestic, economy, the bigger risk now is the monsoon and how that really performs. And I think that's going to be extremely important over the next 3 months, both for inflation as well as growth, and would determine the, future interest rate paths for us here in India.
All right. Sakshi, so what are your net expectations on inflation given some of these factors at play? Where would you place it? Inflation has been on the decline, but if we look at some kind of a range for the next few months and perhaps, till October or so, what would you anticipate?
So I think the next two prints are going to be particularly, benign, between 4–4.5%. There is clearly a base effect and some downward momentum that we are noticing in the data. Beyond that, I think a broad range of 4.5–5.5% is where I would expect inflation to be. This is, of course, assuming that the monsoon situation is, continues to be normal. We don't see a sudden spike in commodity prices globally. So if any of these assumptions are busted, there are, of course, then pressures to the inflation range that I am talking about.
Sakshi, banking liquidity, and you touched upon what's happening in the banking space, but also talking about liquidity was in surplus, rising to the tune of about 2.5 lakh crores. That's at the beginning of June. What's the picture there going forward?
Right. So, if you look at what was happening to liquidity about a month back, we were seeing liquidity conditions tightening quite significantly. But since then, I think a number of factors have supported an increase in the liquidity surpluses, in the banking system. So, clearly, I think some of the FX interventions that we saw from the Reserve Bank has added to the liquidity position. We've also seen more recently the withdrawal of the 2000 rupee note has led to a sudden increase in the liquidity surplus in the system. I think going forward from here on, my sense is that as we move into the end of this quarter, of course, there are quarter-end tax-related outflows. So some of the current liquidity surplus that you are seeing could come down. Over a more medium-term perspective, my sense is that, structurally liquidity is going to tighten from here on, and I would expect it to be below 1 lakh crore on average in the system. I think that the RBI would want to withdraw and continue with its stance of withdrawal of accommodation so that there is greater transmission of the policy rate hikes that it had delivered in the past. So I think just to keep inflation and inflation expectations under control, it is likely that they will continue to intervene in the overnight market to manage the liquidity situation and keep it in a slight surplus.
Okay, fantastic. So clearly what you're saying is that while we're expecting a status quo, it shouldn't be misinterpreted as easing in any way whatsoever, given a whole host of these very serious factors that continue to really influence the RBI's move. Thank you so much for joining us, Sakshi, and we wait to hear what comes out of the MPC. Indian companies reported healthy profits in Q4 FY23 and posted highest earnings growth in the last 4 quarters. Corporate earnings were driven by financials and auto, while metals dragged aggregate profitability. While most of the earnings came in line or better than expectations, a large part of earnings were lopsided, with a few Nifty heavyweights leading the show. Here's a slice of what Siddharth Khemka of MOFSL had to say on top stocks post the results quarter.
Your own sense of how the markets are shaping up. We've been looking at momentum building on. Do you get a sense that we are going to be seeing that record level on Nifty anytime soon?
Yeah, very good afternoon. So I think market momentum is pretty strong. We have seen the global market also being kind of supportive. And with RBI monetary policy ongoing and the US Fed policy next week, the expectations from the central banks is now of a rate pause, which the markets are taking in as positive. And if you look at the overall earnings season that has just gone by, both in India as well as globally, earnings season has been quite good up to the mark, and that is also kind of supporting the equity markets. Nifty on its own, if you look at last 1.5 years, we touched 18,600 in October 2021, and from there we went down and now recovered. So there is almost an 18 months or 1.5 years of time consolidation, which has brought the valuations in the comfort zone from almost like 22, 23 times 1 year forward earnings. We are now at 18, 19 times 1 year forward earnings, which gives a lot of comfort that the market momentum would continue. And a big difference this time is that with FIs on a buying spree, the broader market, which is mid and small cap stocks, are also participating, where we see a lot of individual niche sectors, stocks doing well. And that is something that we believe would be the key driver for the market going forward.
In terms of specific stocks, where were your top earnings upgrades and top earnings downgrades coming in?
Yeah, so if you look at the earnings upgrade and downgrade, I will tell you the stocks, especially in the large cap space, where we saw the top earnings upgrade. So in terms of Nifty, the top earnings upgrades were from Tata Motors. We saw 30% upgrade, Bharti Airtel, Bajaj Auto about 7 to 8%, Divi's Lab from the pharma space, where we are seeing improvement, and Hero MotoCorp. So largely we saw a lot of upgrades in the auto space. Yes.
Okay, and where did the downgrades really come in on?
So we lowered our estimates largely on the commodity side, as we saw. So ONGC was the top downgrade with 16% earnings downgrade, followed by UPL, Grasim, Hindalco, and Coal India.
Okay, coming in. So from these top upgrades or otherwise as well, from the entire basket of Q4, any top stock recommendations that you've given, top stock picks you've picked out?
Yes, definitely. So we would like to have some of the, so based on the earnings and the outlook, some stocks that one can look at post the quarterly earnings season. So within the auto space, our preferred pick is Tata Motors. We believe that the company will benefit from a CV upcycle plus a stable growth in the passenger vehicle segment, mainly led by the strong penetration on the EV side that the company has been able to do, plus improvement in volumes and margins, which I have already spoken about. And we are seeing good cash flow generation from Tata Motors. So overall, all the engines are kind of firing for Tata Motors. So we see a good upside from here as well. Within the banking space, we like Axis Bank. The business growth was healthy, led by strong traction across segments. Asset quality continued to show improvement. The bank has a strong pipeline in terms of this corporate loan book, and thus we expect good traction in the overall loan book as well. ROEs are expected to improve to almost 2% and 18% by FY25. So these two stock picks from the sectors which are of the leaders of the pack, that is auto and banking.
Markets extending gains to a fourth session now, led by FMCG, metal and realty stocks today. Sensex up 350 points. We're at 63,000 now, just ahead of that RBI policy outcome. Nifty ending above 18,700. That's for the first time in 2023. Both benchmarks rose to more than a 6-month high and are now less than 1% away from record levels. The Nifty gainers today: Britannia, Tata Consumer Products, Nestle, BPCL and HDFC Life. Laggards: Kotak Mahindra Bank, Cipla, Maruti, Bajaj Finance and Adani Ports. State-run Bharat Sanchar Nigam has got another lifeline. The Union Cabinet has approved the third revival package of around 89,000 crore rupees. That's $11 billion for the company. Earlier, the government in 2019 had given BSNL 69,000 crores, followed by another 1.64 lakh crores in July 2022. With this, the total authorized capital of BSNL has been increased from 1.5 lakh crores to 2.10 lakh crores. The centre does hope the company will turn profitable and offer 4G and 5G services.
Well, BSNL is a very trusted brand in significantly large rural areas of the country. We find that BSNL is getting very good traction on its fiber, optical fiber, broadband connectivity that it is providing. I think it's doing about 1,50,000 connections every month. It's getting that number of customers every month. So we do see a good, sustainable market share for BSNL in the coming months and coming years, and very significant market share in the rural areas.
Of an online meeting where an HDFC executive is berating his subordinates for sales targets has raised concerns over the mis-selling of financial products like insurance policies. Business Today's Sakshi Batra spoke with banking analyst Himendra Hazari as well as Tina Jain Kaushal, editor Money Today, on the concerns that this incident has raised and what needs to be done to prevent mis-selling.
Now, you've been observing this sector very, very closely over a long period of time. I wanted to take your, take first on this 75 policies in a day kind of a target that this person was seen asking his employees to do or juniors to do. Is that a usual target that is given to a bank employee?
So these targets that are given, are multiple targets are given to branch managers, and insurance is just one of them. You know, they have targets for selling savings accounts, term deposits and life insurance. A whole lot of multiple targets are given, and depending on urgency, you know, a day they will keep shifting and emphasizing whichever targets they feel that there is a shortfall. And today, if you walk to any private bank branch, you will see that the branch staff are under enormous pressure to meet these multiple targets that are given to them by the top management.
And help our viewers understand why is exactly there so much pressure on bankers to sell these many insurance policies in such in a single day.
So, Sakshi, clearly banks are allowed to cross-sell products. They can cross-sell many products like PPF is there, mutual fund is there, insurance policies are there. But why banks are focusing on insurance policies? The one answer to it is high commission rates. When they sell PPF, the commission might be nothing. When they are selling mutual fund, it is around 0.5% that is paid to bankers. But when it is insurance policies, it is up to 50% of the premium that is paid as commission to banks. So clearly it adds to their profit, and their profit increases when they sell these third-party products.
What are the kinds of mis-selling products that is done here? What could a user really end up with in such cases if not properly educated like you've been talking about?
You see, I have known of instances, of course we don't know in this case what exactly has happened, where customers want to open a bank deposit and they are completely missold. You know, actually the bank staff do fraud. They deliberately put their money into an insurance product. The customer believes he has opened a savings account or he's opened a term deposit. Only when the premium comes in that they realize there's something wrong. And then when they approach the branch, they realize that they have not got a bank deposit, they have got an insurance policy where they have to pay premiums for about 15 years. In other cases, I've come across even students whom you cannot sell a policy to because they are not earning. The banks have forged their age, forged their income proofs, and this shows a total collapse in underwriting standards even of the insurance companies because there has to be a verification done. But the entire process is so corrupted to achieve your targets that you have such practices.
Tina, what is the recourse measure for a consumer who has been, who's now holding a missold policy?
Sakshi, in every insurance ad we see there is a phrase which is called insurance is a matter of solicitation, which clearly means that insurance should be asked for and it should not be sold. But as we have discussed, there are so many cases of mis-selling of insurance policies. So if you have been the victim of insurance policies, there are several ways, several recourse measures to get your money back. So one of the first things that you need to do is to look whether the free look period is still on in your policy. So according to IRDA guidelines, you get a free look period of 15 days in which you can cancel your policy if you think it is missold. And the beauty of free look period is, without any questions asked, insurance company have to cancel your policy if it is missold to you. So company cannot ask you or to give, the onus is on you to say that insurance has been missold to me. But only fact you should know that in this case, under free look period, you might be deducted some charges like mortality rate of that period or some other nominal charges. But if that free look period has expired, what if the 15, 30 days, whatever your insurance company gives has already expired? What is the second level of measure that you can take? Then in that case, you should reach out to your insurance company. You should write what has happened to you. You should give a detailed email under which in which branch the incident happened or which agent you were involved with, and you should directly contact with your insurance company. Then again, you have to wait for 30 days. If you do not get satisfactory answer from the insurance company, then you have the then you can go to the third level, which is IRDI level, the insurance regulator level. So they have set up the system called Insurance Bharosa system, under which you can register your complaint. So this is three levels which you can use to register your insurance complaint. First, check the free look period. Otherwise, go to the insurance company directly. 30 days period is there. Otherwise, escalate it to the regulator. But you have to be proactive, because after 15 days, the onus is on you to prove that the insurance has been missold to you.
Elon Musk's Tesla has agreed to the Indian government's demand to set up a vendor base in India. Currently, more than half of Tesla's global production takes place in China. My colleague Chetan Bhutani joining us on the story. Chetan, does it mean Tesla is a step closer to shifting part of its business out of China and into India? And by when could we see this happen?
Well, that's right. Elon Musk's Tesla could soon make in India for the world, as top sources in the government have confirmed to Business Today TV that the company has in principle agreed to start manufacturing in India. In fact, no formal proposal has been signed as of now, but yes, by the way of mutual understanding, the company has given a green light to the government's, in fact, mutual persuasion that happened last month. Sources have also confirmed to Business Today TV that Tesla will set up a vendor place in India. But however, the government is of the opinion that the company should probably start manufacturing and, in fact, assembling electric cars in India, and then probably move on to set up a vendor base. In fact, last month, the officials of Ministry of Road Transport and Highways, Department of Heavy Industries, the Prime Minister's office, they all met Tesla officials just to take a rain check at how India is serious about this electric vehicle revolution in India, and how the country in fact wants to go out. So in fact, my sources have also told me that the government in fact could sweeten the production linked incentive scheme 2.0 that would be coming up to ensure Tesla also gets some benefits. In fact, it has now in fact said that they are not anymore seeking demand for an import duty cut. But in fact, you should remember that owing to different geopolitical situations in China, the company has more than half of its production.
Chetan, will Tesla get concessions from the Indian government for setting up a base here?
The government is of the opinion that if Tesla does something and starts manufacturing, not out of the way, not a green carpet would be rolled out for Tesla, but yes, the government is looking at a production-linked incentive scheme specifically for electric vehicles and its components, because the FAME scheme is almost coming to an end, and various factors have contributed towards its ending. But yes, a PLI 2.0 is in the works, which probably could benefit Tesla.
All right, Chetan, thanks so much for joining us with all the latest on Elon Musk and Tesla. Now, sticking with the auto industry, Maruti Suzuki has rolled out its much-awaited SUV, the Jimny. It's at a price tag of 12.74 lakh rupees. The car will come in 6 variants, with the base model starting at 12.74 lakh, that's ex-showroom. The top-end Alpha AT dual-tone model at 15.05 lakh ex-showroom. With this, Maruti is aiming for a 25% share of the SUV market in FY24, with volumes close to 475,000 units. The lifestyle SUV, which is pitted directly against the Mahindra Thar and Force Gurkha, will be retailed across all 600 Nexa stores in the country starting today. The man behind the AI revolution is here in India. OpenAI founder and CEO Sam Altman with India's G20 Sherpa Amitabh Kant today in New Delhi. The discussions focused on the potential of generative AI and how emerging economies can leverage this to improve the quality of life of citizens. Altman's visit to India is significant as it comes at a time when the country is keenly looking at AI research and development. That's where we leave it on the show tonight. Thanks so much for watching.